Hello and welcome to your Damn Good Business Cashflow Planner. The goal of this planner is to give you a super simple cash forecasting tool. You can input your income, you can input your expenses, and then be able to see where the pinch points are before they happen. Let me show you what it looks like. So you have 5 tabs on your spreadsheet. The first tab inspiringly says start here and gives you an overview of the key rules, how to get started. And probably the most important thing here is to know that if you're not sure, just use your best guess. Don't wait to get things perfect before you start using it. The key is to get clear on what could be happening so you've got time to respond before it actually happens. So the first tab you've got is your expected income. Now you can see here you have got some examples in. The examples in yours, I think you only have 2. In the actual one, you can overwrite them. So first column, you want to be putting in your expected receipt date. So the day you think they will actually pay you. You can say where that money's coming from, why they're paying you, and importantly, the amount. Feel free to add any notes that will help you to know what that money is for, or potentially why it's coming in so late. So it might be that you have a June invoice that you know is not going to get paid till the end of July or maybe August, and that's because they're on holiday. So you can add those sorts of notes in here for your reference. So when you come back and have a look. Now, the expected receipt date, the important thing here is that you are picking the date that you expect to get some money, not the invoice date, not your official payment terms date, but the day you actually think it's going to come in, because that's what the real picture looks like. That's where we're being honest with our cash flow. Sadly, not all of our customers always pay us on time. So put in what's there, you can delete, you can add in, you've got a lot of rows that you can be working through. If you find that you have too many transactions for this, it's probably a sign that you might need some kind of more sophisticated cash flow forecasting software, or indeed just look at a slightly smaller period. You can then add in your recurring expenses. So these are the things that happen every single month. So your kind of monthly direct debits. Now, it might be that you have a payment plan that is actually only for 6 months, and you can put that in here too. So you could put new laptop, say that that's coming in, and it's payment plan. You could put in the monthly amount. So you're going to be paying £150 a month on the 10th of the month, and it's going to start in May. But it's then going to go on until only 6 months. So May, June, July, August, September, October. And it's just a monthly fixed term. That last column is just for your reference. But that means we'll see that will appear in there just for those months. So we'll see there'll be a difference in our totals. But there might be other one-off expenses, as you might expect, things you pay once or annually. So they just appear that one time. So pop them in, whatever date, again, you expect to actually pay the transaction is what you want to put in that first column. You can put some more details about it, and importantly, the amount here as well. And then all of that data gets pulled through to your cash flow summary. So over here, you will need to pick which month you want this to start, and you've got a drop down that you can select when you want it to start, and it will give you 12-month picture from that date. You put in the starting balance at the beginning of that month. So if you had no money in your bank account, you can put in 0, and you can see that it starts off with nothing, adds in your expected income, takes off any recurring and one-off expenses, gives you an overall movement, and then tells you where it thinks you're going to be at the end of the month. The status column here at the end is just a really high-level guide of what's going on. We want things to be green, keeping a little buffer in our bank account, but sometimes it's going to get smaller, it's going to get squeezed. You can see that's gone down to amber. Or when it starts to go minus, hitting our overdraft or something similar, you can see it's gone into the red. So that's not great for us. Not the end of the world, just a sign that we might want to be looking at it. And of course, doing this in advance helps us to make a plan to then try and fix it. So maybe if I put a bit of money into my bank account at the start of the month, actually that's going to keep things a bit more comfortable. Or I need to look at whether all of the expenses are going through in May. So you can see we've got a nice big one there, whether that could maybe be delayed. So this is how we can use it to plan and to look ahead in our business. You can see here the recurring expenses from May to October are slightly higher because we've got that payment plan going through, but then they soon disappear. If I was to pick a different month to get going with, so let's say I picked later on in the year, started July, you can see everything kind of moves down. I haven't got data in here, so there's nothing in there. But this is where you can start to look a little bit further ahead if you want to. Importantly, it is a planning tool, educational, informational advice. Please do get in touch with your trusted finance professional if you see something that worries you or if you need further help.